In today's stock analysis, we are going to examine the key pillars, look at past results, see what the analyst's predictions are, create a valuation, and review then rate the company. Today we are going to look at Nvidia, ticker NVDA. Let's dive into the process I follow when reviewing whether or not to invest in a company. After I've collected all the financial information, I then analyze what I consider to be the 12 key pillars. These pillars are based on the insights and teachings of the best super investors and what I consider to be the key metrics when evaluating a company. Ideally, we would like to see each of these metrics achieve or exceed a specific target. Companies can earn 1 point for fully meeting the target or 0.5 points for coming within 2% below the target. The first pillar is earnings per share growth. This is where we take the net income and divide it by the shares outstanding. For Nvidia, earnings per share growth over the past 12 months is 146%, far exceeding the 10% target, scoring 1 point. Next, let's look at free cash flow growth, which measures the money a business can generate from its operations. Warren Buffett emphasizes the importance of strong financial health and prefers companies that can generate substantial free cash flow. Nvidia's free cash flow growth is 126%, exceeding the 10% target, scoring 1 point. Next, we come to revenue growth, which tells us how good the company is at generating income before deducting expenses. Nvidia's revenue growth is 115%, far exceeding the 10% target, scoring 1 point. Now let's turn to book value growth, calculated by subtracting total liabilities from total assets to indicate equity growth for the company. Phil Town believes book value growth is the most important metric, as it has the interest of the shareholders at heart. Nvidia's book value growth is 86%, exceeding the 10% target, scoring 1 point. We then assess the management of the business by looking at return on invested capital and return on equity. These measures allow us to evaluate a company's efficiency at allocating capital. For Nvidia, return on invested capital is 81%, and return on equity is 92%, both well above the 10% target, scoring 1 point for each. Now we move on to debt. Joel Greenblatt prefers companies that are able to pay off debt with their free cash flow within 3 years. Nvidia's debt would take 0.17 years to pay off, which is well below the target and earns 1 point. With the information we have gathered, it tells us that aspects of the key pillars are solid, but let's explore the company further. Now let's look at the remaining key pillars which help define an excellent business. Let's look at the gross margin, which indicates how much money a company retains after incurring the direct costs of producing its goods or services. This is currently at 75%, exceeding the 40% target, scoring 1 point. Next, we come to the operating profit margin, which tells us how much profit a company makes on $1 of sales after production costs but before interest or tax. Peter Lynch prefers companies with strong operating margins when assessing their financial health and competitive advantage. Nvidia's operating profit margin is 62%, far exceeding the target, scoring 1 point. Free cash flow yield provides a more realistic view of a business's financial health. Terry Smith prefers companies with a free cash flow yield of 5% or higher. Nvidia's free cash flow yield is 2.42%, falling below the target, scoring 0 points. Next, we assess the 10-year book value growth as potential shareholders. For Nvidia, this is 50%, exceeding the 10% target, scoring 1 point. Lastly, Bill Miller believes earnings growth is the biggest indicator of a company's stock price. Nvidia's 5-year net income growth is 170%, significantly above the target, scoring 1 point. In the description, I've included a link to the investors page and the annual report if you want to check it out for yourself. Nvidia has demonstrated exceptional growth and profitability across nearly all key metrics. Its leadership in graphics processing units, data centers, and AI infrastructure has placed it at the center of one of the fastest growing sectors in tech. As of today, the stock is trading at $101.49. From September of 2022, the stock experienced explosive upward momentum, fueled by surging demand for AI chips and strong quarterly earnings. Over the past year, Nvidia's stock price has seen substantial gains, but has also seen some sell-offs due to market volatility. Looking at the overview, we can see the current market cap is approximately $2.48 trillion. They are currently generating $130.50 billion in revenue for the trailing 12 months, and have 24.40 billion shares outstanding. At present, their earnings per share tell us that for each share of stock, the company is generating $2.94. Their price-to-earnings ratio is 34.52, which is above the S&P 500 average of 26.28. Their forward PE ratio is 22.84, and their estimated EPS growth rate for the year is a conservative 13%, which values the stock at about $75. According to Morningstar, Nvidia has a wide economic moat due to its cutting-edge technology, industry dominance, and high barriers to entry. The overall consensus among analysts is a strong buy, with a 12-month price target of approximately $170. Analysts are forecasting an average EPS growth rate of 20% over the next 5 years. Let's calculate a valuation. I will use Nvidia's current earnings per share of $2.94. Combining historical growth rates and future analyst predictions, I estimate an earnings per share growth of 20%. Assigning a forward price to earnings ratio of 25, projecting 10 years forward, and applying a desired return rate of 15%, this results in a future stock price of about $455. The current intrinsic value is about $112, with a margin of safety at $84.37. Since the current price of $101.43 is below the intrinsic value, this scores a check. Remember, if you are wanting to make the biggest gains, the price that you pay matters. But it all depends on your personal view and outlook for the company, as well as the return on the investment you would like to see. When reviewing the key pillars, Nvidia scored 11 out of 12, earning a check. Over the past few weeks, the stock has experienced volatility due to political maneuvering, presenting a potential buying opportunity, scoring a check. Analysts are predicting a growth rate of 20%, scoring a check. The current price matches the intrinsic value, signaling a check. According to Morningstar, Nvidia has a wide economic moat, which scores a check. My final overall rating is 5 out of 5 stars. Nvidia is one of the most well-positioned companies in tech today, with massive growth opportunities, excellent financial health, and industry-leading innovation. Thank you for joining me in today's analysis. Don't forget to like and subscribe for more insights.